morning, everyone.
Good morning, sir.
So all of you yesterday got the format.
Yes, sir.
Now submit it.
Yes, sir. Just some formatting issues. We will submit it before afternoon or evening, sir.
Right, right.
Sir, we will send it by converting it to PDF, sir.
No problem.
Okay, sir.
Better you send it by converting it to PDF. Taking a printout of it would be easier for me.
Okay, sir.
Hmm? Okay, so we were discussing about deemed profits, right? Deemed profits is a concept that was introduced, when people saw that apart from regular source of income, there can be other incomes which is related to business, but they cannot be called as income from business, and that's the reason the concept came into picture called as deemed profits. That means uh, they don't look like you have earned income, but they still are considered as income earned. I repeat my words. These entries or these transactions look like that you have not earned anything, but actually speaking, you have earned something, and that's the reason it is called a concept. The concept has come into picture called as deemed profits. Okay, and one of the concepts that we learned yesterday was a concept of remission of liability or recoupment of losses. Okay, the concept of recoupment of losses or remission of liability. This was a concept that we found out yesterday, right? Okay, from today we'll start the next concept. Okay, I'll just share the screen with you today. Vishaka, can you give me an example yesterday that I explained to you the concept of remission of liability or remission of losses or recoupment of losses? I did mention an example yesterday. What was that example? Can you please tell me that example?
Hello, sir. I was absent.
Why? I knew that. That's the reason I called you.
Sir, I'm not well.
I said, why were you absent?
Sir, I'm not well.
You're not well. Okay. Let me make somebody else today. Yeah, Tanas, can you tell me? Tanas, come in the video mode and can you tell me the example that I cited yesterday as far as remission of liability or recoupment of losses? I did mention some example yesterday. I just want you to tell me that example. That's it.
Even I was not there yesterday.
Good.
Sorry, sir.
Yutika, can you tell me that? Can you tell me the example for yesterday that I cited?
No, sir. I was absent yesterday.
Good. Ashwini? Ashwini, can you tell me the example? Is Ashwini there? Is Ashwini here? No. Ashwini. Okay, Pradeep Gauri, can you tell me the example that I cited yesterday?
Sir, I don't remember.
But what was it? Some words here and there.
I'm not able to recollect it.
What happened?
I'm not able to recollect the example.
Okay, fine. Gautami, Gautami, please tell me the example that I cited yesterday. Gautami, are you there? Okay. Sushmita, Sushmita, come online, come in the video mode and tell me what was the example that I discussed yesterday as far as recoupment of losses is concerned. Priyanka, is Priyanka here? Please come in the video mode, every one of you. Yeah, Priyanka, can you tell me the example that I cited yesterday as far as recoupment of losses is concerned? Okay. Can anyone who is there, can you tell me what was the example that I cited yesterday?
Sir,
Yes.
sir, you mentioned about sending goods on credit to a person and later he is not able to pay it. So it was a bad debt for that year, but he paid it in the next financial year.
Okay.
So it was a profit of the previous financial year. So
Okay.
but so that was the example you gave. So
Correct.
that was a deemed profit.
Correct.
So
Correct.
actually it wasn't a profit of that year, but previous year.
Correct. Correct. So what I did, I sold goods on credit. That person to whom I sold, I gave him 6 months time or probably 3 months time to pay. He did not pay me in 3 months. So I gave him another 3 months. He was still not able to pay. And at the end of the financial year, I had to make a provision that I had to decide that this account is going to be a bad debt. This account is going to be a bad debt. So if this account is going to turn out to be a bad debt, I have to make a provision for this amount. I have to make a provision for this amount in my balance sheet. So I make a provision for this particular amount and I write off that particular amount. I write off that particular amount. So the moment I write off, it has gone out from my books of accounts. Okay, this account has gone out from my books of accounts the moment I write it off. Now, in the next financial year, the person whom I had written off, his financial condition improved and he paid me whatever is the bill that was supposed to be due from him. So the amount that I had written as loss, or the amount that I had written as written off, I recovered that particular amount which is related to business, not in this financial year, but in the next financial year. That is the reason the money that came to me, I will not call it as income from business and profession, but it will be termed as deemed profits. That means it was a profit, but it was not related to this year, it was related to some previous years which you have recovered today. That is the reason it is called deemed profits. Clear? So this is the first condition that you have to understand, or the first concept that you have to understand as far as deemed profits. So the first way by which deemed profits can arise is by way of remission of liability or recoupment of losses. The second one is, as far as a power generation plant is concerned, specifically related to power generation plants, okay, it is called the balancing charge. Okay, I just want you to go through this concept of balancing charge, and then I'll explain to you how this concept works out. Now, first of all, the concept of balancing charge is applicable only for power generation plants. Please try to understand this. It is applicable only for power generation plants wherein they employ a straight line method of depreciation. First condition. Now, when you are into a power generation plants, it might so happen that the machine that, or the plant that you are using to generate power might become old, and over a period of time you might have to scrap it out, or you have to sell that particular plant to some other company. So when you sell that particular plant, if you have generated any surplus, if you have generated any surplus, okay, which is over the written down value, which is over the written down value, then that particular amount is called as deemed income. I'll just give you an example. All power plants have to depreciate by using straight line method of depreciation. Okay. Also, today most of the companies also calculate the written down value for the same plant. Now, they take depreciation, they take the benefit of depreciation using straight line method, but they also calculate the value of depreciation using the WDV method, right? So they use a WDV method and arrive at some value. So I'll call this value as X. So they arrive at some value of this particular power plant. Now, suppose in this particular financial year, in this particular financial or the previous year relating to 2018-19, okay, previous year of 2018 or 19, you have sold that particular power plant. So when you sell that particular power plant, there can be two things. Okay, either you will have a loss or you will have a profit. Now suppose you are in a surplus. Okay, you have to check whether this surplus that you have got, whether this amount that you have got, is it more than the written down value of the asset. If it is more than the written down value of the asset, then that particular difference amount will be called as balancing charge, and it will be termed as deemed profits. On the other hand, if the surplus that you have, if the surplus that you have is less than the written down value, then there is nothing called as deemed profits in this particular case. Any doubts in understanding? Any doubts in understanding this particular concept or the second concept of balance charge?
Sir, can you repeat the example once again, sir?
Okay, let us suppose the written down value, okay, the written down value is equal to 2 lakh rupees of this plant. Okay, now you have sold the plant. You have sold the plant for, let us say, 2.5 lakhs, or let us say you have sold the plant for 4 lakhs. You have sold the plant for 4 lakhs. Your purchase price of this plant was, let us say, Okay, we'll directly take the surplus because I have to find out the purchase cost otherwise. So after selling, you have a surplus. After selling this particular asset, you have a surplus of, let us say, uh, 50,000 rupees. You have a surplus of 50,000 rupees. Now check, Narayan, is this surplus greater than the written down value? Is this surplus greater than the written down value? Is it so?
No, sir. No, sir.
No. If the surplus is not more than the written down value, then it will not lead to deemed profits. But on the other hand, if I have a surplus of not 50,000, but if I have a surplus of 2,50,000, if I have a surplus of 2,50,000, then what is the written down value of my asset? The written down value of my asset is only 2 lakh rupees. Written down value of my asset is 2 lakh rupees. So now what is the excess surplus that I have? I have 0.5 lakhs, which is nothing but 50,000 rupees. So this 50,000 rupees will be termed as deemed income. Are you able to get it?
Yes, sir.
Okay. So this is the concept as far as balancing charge is concerned. Next concept is as far as
Excuse me,
scientific
sir.
asset is concerned, or scientific research and the asset that is being used for scientific research. First, go through this, then I'll
Excuse me,
explain to
sir.
you what is it.
Excuse me, sir.
Yes, Swapnil?
Sir, selling an asset at a greater value than the returned on value is directly profit, right? So why it is deemed income?
See, it will be called as, there are two things. Are you selling the asset? Are you selling the asset at a purchase at a price more than your purchase price? See, I purchased the machinery for 4 lakh rupees. I sold the machinery for 2 lakh rupees. Okay, this is a power plant. I purchased the asset for 4 lakh rupees. This is my purchase price. This is my sell price. Right? Will I have a profit here?
No, sir, but profit will be there on the returned on value.
Profit will be there on?
Returned on value.
No. So what I'm saying today, you don't consider this as a capital gain or something like that. This is not a capital gain or capital loss. What you have to do is you have to compare, you have to compare the selling price of the asset. You have to compare the selling price of the asset and the WDV value of the asset. Here, please don't consider the purchase price. Consider the selling price of the asset, that is a power plant, and the written down value of the power plant. So if my written down value of my power plant is, let us say, 1.5 lakhs, I'm just giving another example. If the written down value of my plant says 1,50,000 and I have sold the plant for 2 lakh rupees, okay, in that particular case, my sale value is less than the written down value, so there will be no deemed profits. But on the other hand, if my written down value is 2,50,000 and I have sold the asset for 2 lakh rupees, then in that particular case, 50,000 will lead to the balancing charge, or we call it as deemed income. Here, please, Swapnil, don't compare with the selling price of the asset and the purchase price of the asset. When you compare selling price of the asset and purchase price of the asset, it will lead to capital gain or capital loss, whatever it is. Here, we are not considering the purchase price of the asset. We are considering the return down value of the asset. Please note it. Getting it, Swapnil?
Yes, sir, but still, if we consider the returned on value and the sale price also, no, it's still a profit.
Yeah, that's what. It is a profit, but it will be called as deemed profits. It will not lead to capital gain, short-term capital gain or long-term capital. It will not have that capital gain concept. It will have an income, and that income will be called as deemed income. Why is it deemed income? When you sell the asset, when you sell that asset is not there with you, right? When you sell that asset ceases to exist in that particular block. So when that asset ceases to exist in that particular block, whatever excess that you have relating to that particular asset will be called as deemed income. Deemed means it was supposed to come, but it did not come when the machine was there with you. It came when the machine, you disposed of the machine. After that, the income came. That is the reason it is called deemed income. Getting it?
Yes.
We'll do one thing. While discussing problems, I'll take a problem on this part. I'll take a problem on balancing charge. Okay. So all these things will be clarified. Next, go to the concept of assets used for scientific research. Done? Have you gone through it? Now, what does this particular section say, or this particular concept say? There are some assets that are exclusively used only for scientific research. And when you use equipments, assets, or instruments which are exclusively used for scientific research, the government gives you a deduction. Directly, the government gives you a deduction under Section 35, stating that you are doing some good research which is going to be beneficial for the company, and that is the reason whatever money that you have going to use for your asset will not be called, will, a certain percentage would be given extra to claim as benefit. Are you able to understand? Say for example, I'm just giving a hypothetical case, see if you are able to understand. I purchase a machinery for my research worth 1 lakh rupees. I purchase machinery worth 1 lakh rupees for my scientific research, and I tell the government that I have purchased a particular machinery which I am going to use exclusively for scientific research. The government tells me that you don't claim only 1 lakh as expense for this, you can claim 125% of this. What is 125% of this? 1 lakh 25,000. So you don't claim expenditure of just 1 lakh rupees, you can claim an expenditure of 1,25,000 rupees for this particular expenditure. Why? Because you are doing scientific research, and this scientific research in turn is going to help the country. That is the reason from government side they give you this extra benefit. In some cases, the benefit is up to 1.75%, 1.75 times. Clear? So we'll not discuss as of now because it will lead to confusion. But any SSE uses assets which are exclusively used for scientific research, and he is claiming deduction under Section 35. In such case, when he uses this asset over a period of time, and when he sells this particular asset, please understand, when he sells this particular assets, the sale proceeds of this asset do not extend beyond the original cost, then it will be called as deemed profits. Okay, if the sale proceeds extend beyond the original cost, it will be called as capital gain. It will be called as capital gain. But if the sale proceeds do not extend beyond this original cost, whatever extra money that you generate, that will be called as deemed income. Clear? Again, this concept is a bit complicated to understand. When we come to problem part of it, I will discuss one problem on scientific research and how benefit can be claimed. Clear? Just as of now, try to understand that any income that is generated by selling of assets which are used for scientific purpose, and if the proceeds of this sale are less than the original cost, whatever income is generated will be called as deemed profits. Clear? Yeah. I think you can just go through this. We already explained. 1, 2, and 3. This I have not explained, but go through it. I'll explain to you later. Just go through these three examples. Yeah, any doubts in understanding this part? Yeah, any doubts in understanding point number 4, recovery of bad debts?
No, sir.
Next, point number 5. Point number 5 says withdrawal from special reserves. Now, any company will always create reserves. Okay, any company will always create reserves because this money is nothing but your general reserves. Okay, so we have category called as general reserves, or we call it as reserves and surplus. It can go by whatever name, but it is a form of a reserve capital that is been kept out. Okay, see, try to understand, when you say the word reserve, it means you are keeping it for some day in future. Are you able to understand the concept? When you say that the word is, when you say something called as reserve, okay, why do you reserve something? Because you want to use the benefit of this at some day, at some point in a later date. That's the reason you create something called as a reserve. If you go to a cinema hall also, you do advance booking or you reserve the seat. Why? Because you want to use that particular benefit at some point of time. That is the reason you want to pay money right now and book it. In same way, in accounting, we have a concept under liability side called as general reserves or reserves and surplus. So we have something called as reserves and surplus. When we say something, when we use the word reserve, that means we are keeping the money aside for some special purpose at a later date. But if you withdraw this money, if you withdraw this money, maybe for business purpose or maybe for whatever name you can call it, if you use this money for business purpose, it will be called as an income for business. I repeat, if you withdraw this particular money for the purpose of business, This particular amount that you're going to withdraw from that particular reserve will be called as, will be used for business, will be called as deemed profits. Why? Because it is, though it is related to business, it has not been generated from operations. It was withdrawn from some pool that you have created, and that is the reason it is a profit, but it is not from your business operations. It is called as deemed profits. And any doubts in understanding the concept here? The concept of withdrawal from special reserves.
So general reserve is not considered under it.
See, what happens is, under general reserves, there are two categories. Okay, one is called as contingency liabilities. They keep something called as contingency liabilities, and there is keep something called as special reserves. Special reserves and contingency liabilities are both one and the same. So one is a general reserve and one is a contingency reserve, or we call it as a special reserve. It can go by whatever name you can call it, but these are the bifurcations that can be possibly seen in that particular account. If you withdraw money from special reserve, it will be called as deemed income. If you withdraw money from general reserves, it will be called as application of capital, or what do you say, you have fund flow statements, what do you say, usage and application of funds. Yeah, source of funds and application of funds, not usage, source of funds and application of funds. That is how the concept goes out. But many companies do not make this provision of separating the general reserves. So they create only one account called as general reserves. And when they withdraw any money from general reserves, it will be called as deemed income for that particular business. Generally, I'm talking about small time businesses. For large corporate houses, they definitely have to make this bifurcation. It is a mandate for them.
Table.
Anything else, Rashmi?
No, sir. Got it.
Okay. Last point is, recovery of business and profession is discontinued. Suppose, I stick with the same example. Suppose you have sold goods on credit to somebody, to one person. The bill amount is 5 lakh rupees. Okay, you have sold him on credit. Okay, and you have given him a time of 1 year to repay this amount of 5 lakh rupees. It's a big order, so you have given him 1 month, 1 year time to repay. During this 1 year, you had major problem in your business, so you shut down your business. You closed your business. Nothing wrong with this particular client, mind you. There's nothing wrong with this particular client. You had some problems, and that is the reason you discontinued your business. You discontinued your profession. And after you discontinued your profession, 1 year later, this particular person gave you 5 lakh rupees. Now, even if your business is discontinued, still this 5 lakh rupees will be considered as income for business. But since now your business is not into existence, whatever money is called will be called as deemed profits. Whatever money that you recover will be called as deemed profits. Had your business been in operational, then this 5 lakh rupees would be called as income from business. But now, since you have discontinued your business and there is no concept of you operating that particular business, whatever money that you have earned will be called as deemed profits. Any doubts here in understanding? One example, starting, I told you the client was a defaulter. The supply, your vendor became a defaulter, and that's the reason you had to make a provision. Now, here you have closed your business, but he is a genuine person. He is paying you after 1 year, whatever credit time you have given. In such case, whatever money that the client pays you back, that entire amount will be called as deemed profits. Clear? Any doubts, please? Yeah, any doubts, please?
No, sir.
Okay. Now, I want you to go through this. What books of accounts have to be maintained? Who has to maintain it? Okay, what do you mean by specified professional? All these things are mentioned here. I just want you to go through this. Then I'll explain to you books of accounts. Okay, I don't think there is no explanation as required. Whatever are the books of accounts that have to be taken into consideration. Just go through this point. This slide and probably the next slide also. And once you're done, please let me know. I'll switch to the next slide. Yeah, any doubts in understanding this?
So what is AO?
Assessing officer, the income tax commissioner who assesses your books of accounts, he is called as assessing officer. Done? You've gone through it? Do you need any explanation here or should I go to the next slide? See, things which are not important, I'm I'm leaving that option to you for you to read. Things which are important, definitely I'll explain it to you. Do you need an explanation or should we proceed?
Proceed, sir.
So basically, there are these categories. Category A, gross receipts in a specified profession. What is a specified profession? All these people come as specified professions. If their income does not exceed 1,50,000 in any of the 3 previous years, immediately preceding the previous year, okay, what books of accounts they have to keep? If it exceeds more than 1,50,000 in the last 3 years, what books of accounts they have to keep? If there is a person carrying out a non-specified profession. Okay, if he is carrying a non-specified profession, that means other than all these people, if he is still called as a profession, for example, a musician, okay, a musician, then probably a dancer, all these are professionals, right, who don't come under this category of specified professional. For such people, they are professionals, but they are not specified professionals. For such people, if their income does not exceed 1 lakh 2,000 1 lakh 20,000, there is no need to keep any books of accounts. Okay, there is no need to keep of books of accounts. And if for non-specified profession, if the income is exceeding more than 1 lakh 20,000 per year, okay, and sales turnover exceeds 10 lakhs, sales turnover exceeds more than 10 lakhs in the last 3 years, they have to maintain a cash book, a journal, a ledger. In fact, they have to maintain everything. Clear? So this is the books of accounts. These are the books of accounts that you have to keep. Any which ways, today everyone keeps a cash book. Everyone knows how to write a journal, and everyone knows how to pass entries in the ledger. Okay, I hope you also know this. When I said everyone, I'm including you people also. I hope you know how to write journal and pass entries of the journal into the ledger account. Okay, so we have this category of people, and then we have another category of people who come under this particular sections. Okay, they come under this particular section. So in what has to be done, or how should income be considered for these people, we'll see it later. Clear? Next, who can do the tax audit? Who is eligible to do a tax audit? Naturally, a chartered accountant is entitled to do the tax audit. Just go through this, and then I'll proceed to the next one. Now, in fact, the government is planning out that, uh, since there are less number of CAs and more number of businesses that have grown in India, not only chartered accountants, but even people who have completed their company secretary course also, even they can do the audit. So there is a provision that is going to come soon, wherein even the people who are certified as company secretaries or CS, even they will be eligible to carry out this particular audit. Any doubts here, please? If there are no doubts, please tell me that there are no doubts so that I can proceed.
No doubt, sir.
Now, I'll just explain you to all these sections, and don't worry as to what is been written. In plain and simple words, I'll explain to you what these receipts are. What do you mean by section 44 AD? I think it is not visible. Yeah. What do you mean by section 44 AD? How is income estimated under section 44 AD? All these things I will mention it to you. Clear? Okay. First, just go through these points. See if you are able to make some sense out of it. If not, then I'll explain to you. Go through these points. What does this mean? It means basically that there are some businesses, wherein maintaining the account is not possible. Okay, so all those businesses are defined under section 44 AD. Now what is it? It says that this provision is applicable to those businesses whose turnover does not exceed 2 crores. So your annual turnover should be less than 2 crores. If your annual turnover is less than 2 crores, in that particular case, there is no need for you to maintain any books of accounts. You need not maintain any books of accounts if your turnover is less than 2 crores. In such case, what would be considered as your income? 8% of this amount, 8% of whatever income that you declare, 8% of whatever turnover that you declare, that will be considered as your income. Say for example, my annual turnover in the previous year is 1 crore. My annual turnover in the previous year is 10 crores. What is 8% of 10 crores? What is 8% of 10 crores? Somebody please calculate that. What is 1 crore? What is 8% of 1 crore? Please calculate it. What is 8% of 1 crore?
Eight lakh.
8 lakh rupees. So
Yes,
8 lakh
sir.
rupees will be your income. That is what it says. 8 lakh rupees is the income from your business. That is what it says. So what is the condition? First of all, you need to be in the business. That is a preliminary condition. Next, your business turnover should not be more than 2 crores. If your business turnover is not 2 crores, then income tax authorities will straight away declare that 8% of 2 crores, that is nothing but 8 lakh rupees, will be your annual income. 8 lakh rupees will be your annual income. And you're supposed to pay tax on this 8 lakh rupees. Now, if you don't want to pay tax on this 8 lakh rupees, what is the other alternative? Then the other alternative is you have to maintain all books of accounts. And if you maintain all books of accounts, and by doing so, when you compute your income, if your income comes only say 5 lakh rupees, then you have to pay tax only on 5 lakh rupees. But for this, you have to maintain all books of accounts. That is what it says. You can have to maintain all proper books of accounts, get them audited, and after audit, if your income is coming up to 5 lakh rupees, in such case, you are liable to pay tax on this 5 lakh rupees. But if you do not maintain any books of accounts, and if your business turnover is less than 2 crores, then 8% of whatever turnover that you have will be declared as your income, and you're supposed to pay tax on this particular amount. Getting it? That is what this particular section talks about. I repeat once again. Section 44 AD is applicable for any business, and that business turnover in the financial year should not be more than 2 crores. Point number one. Second, if your business turnover is not more than 2 crores, there is no need for you to maintain any books of accounts. In such case, the income tax authorities will straight away say that whatever turnover you have done, 8% of that will be considered as your income from that particular business. And they do the calculations, and according to the calculations, they come to a conclusion that 8 lakh rupees is your annual income. And you are supposed to pay tax on this 8 lakh rupees. You realize that this amount is too big, I don't make that much amount of money. In such case, if you do not want to pay this 8 lakh rupees, then what do you need to do? You have to maintain all books of accounts. You have to maintain all books of accounts, pass on the entries in that books of accounts, get it audited from a CA, and then after auditing, if your gross income comes to 5 lakh rupees, you can say that I'll pay tax only on 5 lakh rupees. You need not pay tax on 8 lakh rupees. That is what this particular provision talks about. That's the reason it's called 44 AD. 44 AD. Any doubts here? Yeah, any doubts, please? Yeah, any doubts, please? So this is section 44 AD. Okay. Next is income on estimated basis under section 44 AAD. This is a different section. That was only 44 AD. This is 44 ADA. Sorry, 44 ADA. Okay. Just go through this section. So that was for business. The previous slide was for business. This is for profession. Okay. Same condition. If your business turnover does not exceed 50 lakh rupees in the financial year, there is no need to maintain any books of accounts. Right? So whatever is your turnover, if your turnover is 50 lakhs or less than 50 lakhs, 50% of this, 50% of whatever you declare, that will be considered as your income. Say for example, I am a professional. I'm into management consultancy. I make a turnover from my consultancy to the tune of 40 lakh rupees in a year. So 50% of this amount, 50% of 40 lakhs is how much? 20 lakhs will be considered as my income from that particular profession. Right? Now I come to a conclusion that no, 20 lakh rupees is too much. I don't earn 20 lakh rupees. I earn less than that. Then in that particular case, you have to maintain all proper books of accounts. And if you maintain proper books of accounts and get them audited, then even if your income is lesser, you will be eligible to pay tax on the lesser income. But without maintaining any books of accounts, you just claim that 20 lakh rupees is not my income. I earn less than that. Then in that case, you are forced to pay a sum of 20 lakh rupees towards your taxes. That is what this particular section talks about. Clear? Next. Okay, next. I think we are running out of time. I'll explain you this concept in the next class. This is for business of flying of trucks and leasing of transport vehicles. This is section 44 AE. Okay, what we discussed was AD and ADA. This is 44 AE. 44 AE relates to business of using, leasing or hiring of trucks for transport vehicle as a transport business. Okay, so this section relates to transport business. I'll explain you this concept in the next class. So right now I will stop the class here because we are running out of time. And in my next class, I will continue from where I have stopped. Clear? Please come in the video mode. I just want to take the attendance. I hope every one of you has received the format of presentation of your investment assignment. Anyone who has not received it, please open it out. Okay, I have given what has to be mentioned, what not, what should not be mentioned. Accordingly, do it and send it to me. It is just a copy paste activity. If you have done the assignment, it is just a mere copy paste activity, nothing else. Okay, so quickly do it and send it across. Clear? Yeah, thank you.